Hello and welcome to HiWayFX market news for January 25th, 2016. The key trading pair started the week from gains. During the Asian trading session, the Euro-US pair bridged up the important level of 1.080 by adding 0.2%. One of the key events for the pair this week will be the Federal Reserve meeting on Wednesday, 27th of January. Reuters notes that the US Federal Reserve is widely expected to leave its federal funds rate unchanged at 0.25 to 0.50% at the conclusion of its policy meeting on Wednesday. However, traders will be more focused on whether the possibility of cooling inflation and recent global market turmoil could prompt the Fed to signal concern about the US and the world economic outlooks that may raise questions about its pace of interest rate tightening. The resistance levels for the euro are 1.0871 and 1.0898. The support levels for the euro are following: 1.0742 and 1.0716. As you can see on the graph, on Monday morning the British pound traded above the mark of 1.4300 by adding 0.3%. Europe's biggest banks are laying out drastically different paths for the pound, Bloomberg reported. As sterling dropped this week to $1.4080, the weakest level since 2009, Europe's largest lender HSBC Holdings plc said to the UK. Currency will climb to $1.60 by the end of the year. Meanwhile, the world's second biggest currency trader Deutsche Bank AG reiterated its bearish outlook, which calls for a decline to $1.27. The disparity coincides with the UK facing a slew of challenges, from whipsawing financial markets around the globe and a vote on whether to remain a European Union member to inflation that's close to zero, dampening the outlook for interest rates. While Bank of England Governor Mark Carney on January 19th signaled that a boost to UK rates is still some way off, HSBC said the market has become too pessimistic. The resistance levels for the pound are 1.4361 and 1.4447. The support levels for the British pound euro dollar are following: 1.4215 and 1.4205. On Friday, US crude oil soared over 10%, one of the biggest daily rallies ever, as big banks and hedge funds who had taken out record short positions scrambled to close them, betting the market's long route may finally be over. On Monday, the oil is continuing the growth by adding 0.6%. Oil trades above the level of $32 per barrel. The resistance levels for oil are $32.80 and $33.30. The support levels for oil are $31.70 and $31.20. Gold started a new week on the green area by trading above the key mark of $1,100 per troy ounce. As Bloomberg notes, the $15 trillion route in global equity markets since May is reawakening the lure of gold for investors seeking safety. Hedge funds more than doubled their net long position in Beeline last week, just 3 weeks after they were the most bearish ever. Beeline has seen a revival for its appeal as a haven after being mainly ignored last year in the face of the Paris terrorist attacks in November and the Greek bailout negotiations in July. This time around, concerns about global markets will support the metal, Citigroup Incorporated analysts led by Ed Morse said last week as they raised their 2016 price forecast. People have become complacent about risks, whether it's macroeconomic and geopolitical, said George Milling Stanley, the Boston-based head of gold investment at State Street Global Advisors, which oversees $2.4 trillion. What's out of the fashion may be coming back. That atmosphere of people feeling completely calm and untroubled, I think, is starting to go away. Gold is a very good risk-off trade, and I think people are starting to look very, very carefully at the risky positions that they have on a number of other markets. The key resistance levels for gold are $1,100 and $1,115. The support levels are $1,088 and $1,080. Stay up to date with all the key financial news around the world by liking us on Facebook, following us on Twitter and Instagram, and subscribing to our YouTube channel. For more information, please visit our website www.hiwayfx.com. Thank you and have a good trading day.